Also move on to some of the the sector-specific action that's taking place. It's clearly IT stocks that continue to perform well, along with FMCG. While IT is up by almost about 3/4%. FMCG is up by almost about 1%. However, it's metal and pharma that's largely dragging, while metal is down by about over 1%, closer to 1.5% actually. Pharma is down by almost about 1%. PSE down by almost about 3/4%. Let's also take a quick look at the broader markets. It's not a particularly good day there, with the mid-cap 150 currently in the red. It's down by about 0.5%. The Nifty small cap 250 is in the red as well. It's down by almost about 1/3%. But IT stocks are clearly some of the stocks that are in focus today and the top sectoral gainers today. The stocks are buzzing, leading the rally in the last few weeks. Is there more steam left? Let's go across to my colleague Rucha for more details. Rucha.
Thank you. So as you rightly mentioned, Nifty IT is on the beat. Nifty IT has performed very well. It has also beaten the Nifty index. But let us talk about whether more steam is left in Nifty IT or not. Let's start with talking about Infosys first. While talking about the price movement, Infosys is up 34% in just 3 months, and today it has hit a record high, and right now it is up about 1.2% in trade. But what does the management say about the second half of FY25 is what we'll have a look. While the guidance implies an improved revenue growth, so when we look at the guidance trajectory, it implies improved revenue growth and margins as well, while CC revenue growth is guided for FY25 is about 3 to 4%, while looking at FY24, it was up about 1.4%, while the margins for FY24 was around 20.7%. For FY25, it is slightly improved outlook of 20 to 22%. While BFSI trajectory is something to be watched out for, because most of the IT companies get majority of its revenue from the banking and financial services space. While talking about Infosys, investors should focus on FY25 wage hike impact, because it might impact the margins and also retail vertical as it continues to be soft. While moving on to TCS and talking about the price movements, the stock is up 20% in 3 months, while the PE ratio is 32 times its FY25 earnings, but it's still below the 52-week high levels of 4592. While the management is guided for an improved deal booking in the second quarter, communications continue to remain weak, and that is what is to be watched out for. Moving on to Wipro. While Wipro has also done really well in spite of the management changes in about last 6 months, Wipro is up about 19% in last 3 months. The PE ratio, this one is a slightly cheaper stock. PE ratio is at about 23.3 times FY25 earnings, while the current market price is 533, well below the 52-week high of 579. Well, the management has guided for improved revenue growth. For the second quarter, it is guided for a -1 to +1% growth. So Wipro continues to remain a weak stock in terms of revenue growth, while the investors should watch out for growth in Europe and the Asia Pacific market, and also mind you, the Capco business, which has a lot to do with the discretionary spending of clients, which had been under pressure over the last few quarters. Lastly, I have HCL Technologies. HCL Tech today hit 52-week high of 1796. The valuation of this stock in terms of FY25 earnings is at around 29 times, and the stock is up about 28% in the last 3 months. While talking about the management's plan for FY25, it has guided for a 3 to 5% of revenue growth in terms of constant currency, but this is at similar levels to the first quarter as well. But margins will likely see a little bit of improvement if it goes in line with what the management is guided for at about 18 to 19%. While moving on to what investors should focus on, growth in the ER&D segment, which is the engineering, research and development segment, because the company has said that it is seeing green shoots, which is a positive one for HCL Technologies. And lastly, as I mentioned about financial services, this one about this segment, the management expects financial services to be soft, and it gets most of its revenue from the financial services segment. So all in all, Nifty IT did great in the last 3 months, but we'll see whether it is able to maintain its rally in the remaining FY25 as well.
All right. Well, that was about IT.